Today we're going to talk about why I think Palantir is going to the friggin' moon. And let's be honest, you do too. That's why you clicked on the link. You're just looking for me to give you the confirmation that you already know deep inside your heart. So I'm going to take a little bit of time here and I'm going to go over a lot of the thoughts and ideas I have, and I'm going to try to put together a few pieces of information to help you make an informed decision. With all the fear, uncertainty, and doubt in the market, it's completely understandable to question your thought process, especially with a company that has government, military, and commercial capabilities. It almost sounds like a line right out of The Wolf of Wall Street. So before we take up too much of your time, if you feel like I just called you out with your love of Palantir, please smash that like button for me and let's get started. So first, I'd like to go over some of my disputes for some of the FUD that's being currently placed into the market. This article was actually just released yesterday. It says Palantir still relies heavily on government contracts despite push for more corporate customers. The data mining company has not turned a profit since it was founded in 2003. That sounds like an absolute smear article. I don't care who you are. Now, one of the big things is Palantir has heavily relied on government contracts, and some look at that as a negative. Me personally, I was in the Army. I do not see that as a negative. Those are some of the most lucrative contracts, some of the most expensive funding for new projects out there, and it's a great backbone regardless of what the condition of the economy. So if the economy goes down, the government is still going to produce contracts. They're still going to need more stuff done, more work done, more spending. As we've seen with the recent drop in the economy or the recent market corrections and stuff like that, the government increased spending. Now, one of the great things about Palantir moving towards the commercial side is no matter which way the economy goes, businesses are always going to want to save more money, and they're always going to want to cut spending and cut losses, and Palantir helps them accomplish both of those things. So I definitely don't see the government backing or funding or contracts as a negative. I see that as more of a positive as anything. What would you rather have your money backed in? The government, who is not going out of business, or companies that could possibly potentially go out of business? That's one of the big thought concepts for me as far as the government contracts that are currently being used. Now, the second thing that's currently being pushed into the market is that Palantir is over-evaluated based on fundamentals. And as I went over in a video yesterday, based on this Zacks article from 2 days ago now, they said it has a forward PE ratio of 128, which is actually lower than that now, but it's much higher than the industry average of the 31.39. But based on Palantir being an extreme growth company with quarter-over-quarter growths, exceeding 30%, I don't think that is a fair evaluation whatsoever. So yesterday I kind of took a turn here looking at Palantir. It's currently at a 107.25 forward PE versus CrowdStrike, which is currently at a 335 PE, and it's currently getting buy and upgrades ratings versus Palantir getting their negative and downgrades. You can also compare it to Splunk, which has a 619 forward PE. And these are just a few of them. I think if you go in and look at Snow, a lot of these other companies, you'll see that there's a lot more aggressive PEs than what Palantir is currently being traded at. The biggest evaluation difference I noticed here throughout it was just the amount of institutional ownership. Palantir has one of the lowest institutional ownership out of all three of these companies, most of them being at 74%, 90% for Splunk. And I kind of wanted to go over a little bit why I think that is and why we might be seeing more negative info and articles based on Palantir versus some of those other companies. So the next part I'm going to jump in here too is a little bit more of my conspiracy theories and stuff like that. Take it, as they say, with a grain of salt, but it's just my opinion, my ideas. All right, let's get it. Over the last few years, I feel like we've had a huge advancement in the retail investor. Just the amount of knowledge that is easily available, as far as also the tools that are now available to us that weren't available, multiple years ago. So one of the big changes I think we have seen as retail investors, we have a younger, smarter, newer crowd looking at things from a different perspective. One of those things, such as like say Coca-Cola, for example, based on trading many years ago, they did fundamental analysis on a stock, and when a company like Shedadale, I might not be saying it right, but whenever they come out with an advisement, then other institutions and investors would follow after. So if they say, hey, the fundamentals on this stock went up, they buy a bunch of shares, then tell everyone, and then people would go behind them and continue buying up those shares. But now with all the knowledge and information that is readily available for everybody, the new modern retail investors wants to skip the whole process in the middle and go straight from A to B. So we're looking at more growth stocks, more high growth stocks, and more stuff that can definitely benefit you in the future that you see a lot of potential in. So instead of investing based off fundamentals, we're investing more based off the future. And we've also began to use those tools to our advantage to take some of those hedge funds and some of those institutions' money, almost like we're playing against them in a game of poker. And you can see a lot of this with the GameStop drama, with the giant squeeze that they got out of there. And then you can also see it with the AMC trend as well, with another squeeze happening there. And this is just retail investors, you know, consolidating information and sharing it on social media and telling all their buddies and friends about it, the potential that's there, and taking advantage. Now, as of late, we've seen some huge changes as far as that goes. Now, one example here, Melvin Capital lost 53% in January, and that money was transferred directly from them to the retail investor. Now, the reason I say that is because if you've been watching the news and stuff, you've seen a lot of these other banks following suit. JP Morgan is selling 16.8 billions in bonds. And then you have Bank of America coming right behind them doing a 15 billion bond sale. And a lot of this is speculated to be freeing up cash for some of these bad investments they've made. So when you take a look back at Palantir, it is easy to see that it's not very advantageous for them to pump up Palantir or encourage people to buy into Palantir, because that's not currently where their bags are. If anything, they're going to want to discourage you and get you to get out of Palantir and get into something more like Splunk, so that you can help them lift their heavy bags. They're at 94% ownership right now in Splunk. This was an investment on their part, thinking that the retail investor would follow suit based on their recommendations and their price targets of the 200, 180, 250, and we're sitting right now at 134. Now, they made those expectations thinking they were going to tax you and take the profit from you. But being the retail investors we are, we make better and smarter financial decisions than that. And multiple times as of recently, we have completely left them holding the bag on their old tricks of the trade. So when they buy up the IPOs before we have an opportunity to, we have just let them hold on to it for us, you know, until the price gets back down at an acceptable level where we'll buy back into it. But as of right now, if Roblox continues to go down, then of course institutions are just bleeding money, which I think leads to more and more of the sell-offs to try to free up capital to cover the current assets they have invested in. Now, a lot of the current evaluation is based off of the past, which we have discussed, you know, multiple times, as Palantir used a lot of employee-based compensation plans, which freed up a lot of their earned cash, and they can use it for further growth, which is definitely in the best interest of the company. Now, based on their expectations, which is a lot of what we're looking at here, its team is generated that they're expecting a 45 year-on-year increase, with the 2020 revenue set to soar at least 30%. Now, these are some of the reasons I think Palantir is going to moon, because currently the evaluation is set and based on these numbers. But I'm going to show you some of the examples here that I've put together based on the information that we already have that is going to pretty much guarantee that we're going to beat those expectations. Now, based on the information we've already received, it's not too hard to start putting together what we expect the earnings report to be. So basically, looking at here what's already announced and what's already public information, we have the National Nuclear Security Administration 5-year $89.9 million contract, which will be broke down to about $4,495,000 a quarter. We have the Fujitsu contract, which will end up being about $2 million roughly a quarter. We have the Japan contract, a 1-year $22.5 million contract, broken quarterly, will be $5,625,000. Now, a few of these, I just used the lowest possible average for the contracts that Palantir has been receiving on average, and I kind of broke it down into each one. So Ring Gear, I gave it a $500,000 roughly a quarter. 3M is probably substantially more than this, but I gave it a $1 million a quarter. Aiken Gump, the $500,000 a quarter. BP, $1 million a quarter. Rio Tinto, $1 million a quarter. And the Faurecia, I gave it a little bit higher at $3.5 million, and we'll just kind of, I'm using that kind of close to compare with the other contracts that they've been signing, which all of these are still some of the smallest contracts they would have ever signed if these are the actual amounts. But like I said, I wanted to use a low expectation there. So as I said, just based on the lowest possible, I think, number averages there, the total amount of contracts signed just this quarter would be 19,620,000, and that is quarterly distribution in money. So now it makes it much easier for us to compare it year over year and quarter over quarter. Now, based on future expectations and everything, and all the information I just went over, that would be a $19,620,000 increase this quarter over last, which last quarter's was $322 million, giving us a little over a 6% increase in just the contracts that we have publicly available here. Now, we're only expecting a year-over-year revenue growth of greater than 30%. Based on this is 6% a quarter. That would be a total of 24% for the year. Now, there's a lot of contracts out there that haven't been announced that we know nothing about. And I'm going to kind of go over a few of those just real fast to make you aware. One of the big ones that was just put out there that there's no details or information to be found on is the IRS initiating Operation Hidden Treasure to root out unreported crypto income. This is a Palantir forefront, and they're using Palantir to help move this forward. So as you may have seen, Palantir just won a huge contract with the UK with a 1.2 billion euro contract. There's actually 31 recipients of this, and it's a 3.5-year contract helping with the supply chains and everything like that in the UK. Now, there is no definition or definitive answer available to how much of this is Palantir is receiving. Based on all the information available, it looks like this stuff is pretty much what Palantir was designed around. So I would lead to believe that they are getting a lion's share of it. But let's say it was just broken down and averaged out to everybody. So this contract would be 38,709,677 euros roughly over the next 3.5 years, which comes out to about a 2,764,000 euro increase quarterly. We also know that they launched on the AWS program through Amazon, and at this time they have 20 plus customer launches, which none of the details or information on how much they're making from those contracts has been made readily available. So this is something that we'll get to see and figure out on earnings. Now, they have also launched with IBM doing similar software deployment, and no information of how many contracts or anything through IBM have been made readily available for us to be able to figure that out either, which I think these two together could absolutely be groundbreaking just by themselves, and I'm pretty excited to see where the data comes in on earnings for both of these two. Now, one of the greatest things for me this last quarter is seeing the wide array of uses Palantir's been able to assume in different industries across different platforms. Now, one of those is Ringier, which is a global media source. Then you also have, like 3M that specializes in making safety and products for the construction industries and stuff like that, as well as, all your masks and all that kind of stuff. But then you also see them, with BP and other industries. It's like it never stops. You can use this platform across anything. So when I think all these reportings come in and we're able to see the earnings and stuff, we're expecting a 30% growth for the year. Broken down into quarters, is going to be only 7.5% is what we're expecting for the quarter in growth. And I think just based on what I showed you there was a little over 6, and that doesn't take into account any of the contracts that we haven't received the information on, or the contracts we don't even know about. There's rumors going around about Facebook, AT&T, Verizon, a lot of these other huge companies out there using Palantir, but the contracts haven't been announced or anything yet. So I think based on those expectations, I think we're going to absolutely blow earnings out of the water on revenue and everything else. The only scary part, of course, is the employee-based compensation. I think they will continue to do that, and I don't see it as a threat, but it's up to the retail investors, which luckily make up over 80% of Palantir. This is the people's stock, and I will continue to say that and push it. Don't listen to the FUD. Don't listen to the FOMO. Don't let the institutions tell you what to do with your money. Find something that you believe in, something that you're proud of, something that you have confidence in, and put your money in it. I appreciate it, you guys. I hope you enjoyed the video. I'll see you next time.